Hey everyone, welcome to today's video where we're gonna look at the expected EV sales for all these companies, Nio, Tesla, Xpeng and LiAuto in 2025. And moral of the story is that Tesla is gonna lose more market share, but don't be scared about Tesla stock price. I'm not necessarily saying it's a buy or sell right now, but I think you shouldn't focus only on EV sales for Tesla because of the reason that they are actually doing really well in the other segment, that is their energy storage business. They're updating their essentially output from 40 gigawatt hours to 80 gigawatt hours by end of 2025 compared to 2024. We can also look at they sold around 30 gigawatt hours in entire of 2024, and that number looks to be closer to 70 for this year. So it's a business that's growing really fast. They have really nice margins on that business, much higher than their EVs right now. And I think their gross margin could be close to 35 to even possibly 40%. Maybe not 40, but 37 is for sure doable for Tesla at a scale right now. Unless there's like some huge competition coming in that segment, which is, I would say, likely. I'm not sure how likely that is, but for the moment, they're like enjoying really fat margins on that energy storage business. So despite Tesla losing market share on the EVs, they're still gonna make a lot of money on the other segment. The more interesting fact here for me is that Nio and Xpeng should potentially sell around, let's say at the bare minimum, 700,000 cars combined. But I would likely say that 800 is more realistic, 800,000 cars for Nio and Xpeng, which is getting close to half of Tesla's sales in EVs. And that's a really nice work done from both Nio and Xpeng, to be honest. Look at where they were in 2020, where they combined were selling around, I would say like 70,000 cars, and Tesla was selling 500,000. So there's a huge kind of out maneuvering of in terms of sales compared to Tesla. And remember that there's a lot of like hinders for these car companies, Nio and Xpeng in Europe, due to the tariff and all the sanctions or whatever that is. So hats off to to Nio and Xpeng in that regard, and of course LiAuto as well. The lithium carbonate price still going like stuck in this kind of 70 to 80,000 range. That's gonna obviously trickle down through the manufacturers for the likes of LG Chem, BYD and CATL, and it's gonna be obviously visible in the gross margin of the OEMs like Nio and Xpeng and Tesla. So that's a good sign. We can see that Nio swap station info on Twitter. Give this gentleman a follow on Twitter. They have currently 3,015 stations, which is with 85,750 swaps per day on the past 30 days average, around 27 swaps a day. Now this number is essentially less than half of what the required 60 swaps per station is required according to Nio's management a couple of years ago in order to break even. Potentially could say due to the number being quite old and the scale of Nio's business much larger now, maybe that number is actually lower now. I don't know, I'm just taking a guess. But I think the signs are there that the swap stations are taking a little bit traction. It's a little bit slow, but they're going in the right direction. And it's gonna, in the long term, be beneficial for Nio, I think, for sure. Now looking at the price target for Nio, 572, 40% upside potential. I wouldn't put too much value in this. I think the more important thing you should think of is that look at the market cap, 11 billion for Xpeng, 8.5 billion for Nio, right? Now if we go to Nio and look at my financial outlook for Nio, what are we expecting for their revenues in Q4 of 2025? So if we scroll all the way to Q4 of 2025, I'm expecting around 4.2 billion in revenue, right? Which means that for the full year of 2025, if you add these four numbers up, you're getting well above 14 billion or let's say around 14 billion in sales. And that's really good, because if you look at the market cap, it's 8 billion or so. So a price to sales ratio of 0.5. And the only catch here is obviously the net income, in this case the net loss. Sadly, in Q3 of 2024, they increased their loss with 30 million, which wasn't a great look, to be honest. I would have wanted them to go in the other direction, maybe go below 700 million in net loss. But now obviously that's what happened. We know that they're ramping up Onvo. That could be one of the reasons. But hopefully we will see them like improve and going back to the middle of 600s in net loss. They have a sizable cash on hand currently. So I think if you look at the cash position at 5.5 billion by end of Q4 or by end of 2024, and the latest reported number was around 6 billion by end of Q3 of 2024. But yes, so I'm expecting 4.2 billion quarterly run rate for Nio based on around, I would say, 100,000 cars or so, 110,000 cars, vehicle deliveries every quarter by Q4 of next year. Is 100,000 cars possible for Nio? I think so. Remember, if you look at again the Onvo discussions, they mentioned that according to the CEO, the production of Onvo should be 20,000 cars already in March. Now assume that by the summer there are around 30,000 cars in monthly run rate for Onvo. Is it possible? I don't know. Let's say 25. That's 75,000 cars per quarter only from Onvo. That's for sure possible, because it means that the rest of Nio business would need to have around 35,000 cars delivered in a single quarter, which is around 11 or 12,000 traditional Nio deliveries. And that would obviously be very, very, very possible if you look at how much Nio actually used to deliver on the classical Nio business. At the bare minimum, they used to be at around 20,000. Like if you look at the blue bars here, which is until I would say September or October, only the traditional Nio without Onvo, right? Onvo started to ramp up late September, if I recall. So if you even forget September, you should start to see Onvo numbers in October. But for essentially since May of 2024 until September, the traditional Nio business was doing 20 to 22,000 cars per month. So I wouldn't be worried that they would be able to do 12,000 cars per month like 1 year later, since the EV market is growing. So I'm not worried at all about Nio for the moment. I'm very happy that AJ, one of the Tesla bulls that likes to kind of talk down Nio. I think let's find him on Twitter. Nothing bad about him. I think he's a professional guy, but he mentioned that he was expecting Nio to make another offering and diluting the shares in Q4 of 2024. That didn't happen, so I'm very happy about that. He was wrong. He gives a vibe that he's kind of always right. I don't really agree with him on all what he says. He's also on thin ice when he kind of discusses about the AI stuff. So I don't think we should follow whatever he says, despite him have a huge following. But yeah, so honestly, looking at this, I think at the end of the day, the most important thing for Nio and Xpeng is that they're just starting. They're essentially where Tesla was in, I would say, 2019, 2020. Look at Tesla's number in 2020, 500,000 deliveries, right? If I recall, 2019 was like 325 or maybe something like that, between 300 to 350 or something like that. So Tesla compared to Nio now, if you look at when is Nio expected to do 500,000 cars, maybe not 2025. I mean, it's possible technically, but I wouldn't hope for 2025. I would say 2026 for sure Nio will break 500,000. And that's just 5 years behind when Tesla did it. So I'm really, really happy with Xpeng and Nio. Even Xpeng, look at them going from 27,000 in 2020 to 400,000 expected 2025. At some point, they'll start to, the smaller players out there will start to, kind of not hang in there, and they're gonna for sure be forced out of the business, because this kind of new EV companies popping up all over the Chinese market every day is not sustainable in the long term. At some point, the big players will win this. So is it 2025, 2026? I don't know. But do I think that Nio and Xpeng are going to be two of those winners? For sure, I think that's right now looks very likely. Which means that despite 4 years of really, really tough time for both these companies' stock, despite the obviously fundamentals, at least in terms of deliveries looking great. I mean, again, look at the delivery increase for these two companies. Nio in light green, and Xpeng in light blue from 2020 to 2024. So the deliveries are looking good. It's just like the net loss, but I think at some point even they start to understand that they have to start to look at that as well. So for the moment, I'm very happy with these two companies. I'm thinking for sure that they're gonna eat more and more into Tesla's market share for sure. And we haven't even talked about again the big fish, which is BYD, which is the dark green here. If you include BYD, I mean, Tesla is not looking necessarily that big in China anymore, despite probably closer to 1 million sales in China in 2025. But that's gonna, I think that's gonna do it for today. It was just a quick update. Tomorrow we're gonna get the week 2 weekly delivery insurance registrations in China. Again, let's be cautious in the first 2 months of the year. We've seen that trend in both 2023 with the green numbers, January and February being slow, and 2024 also being slow, even slower. So let's be a little bit cautious, although I think this year will be much higher than those 2 years for sure. I mean, even 25,000 I think is very conservative, but I like to be conservative. But for sure, if you hold a gun to my head, would I be surprised if Nio does like, let's say, 30,000 in January and 30,000 in February? Of course not. But I just wanted to be a little bit cautious due to the Chinese New Year by end of January and early February. But yeah, so that's gonna do it for today. Please share your ideas and comments in the comment section. Do you think that Nio and Xpeng will continue to eat into Tesla's market share? And which year do you believe that Nio and Xpeng combined will be around 50% of Tesla's deliveries? So thanks for your time and see you in the next one.